The Business Finance Podcast, brought to you by the Best Finance Group. New episodes every Friday.
Hello and welcome to the Business Finance Podcast, episode 7. And we've got a special guest today, our Mergers and Acquisitions Specialist, Alex Reddin. So Alex is going to talk to us about what he does in your role as a Mergers and Acquisitions Specialist. So Alex, if you could explain to our listeners and our viewers what it is you do as a Mergers and Acquisitions Specialist.
Yeah, so I'm a Mergers and Acquisition broker or consultant. I am the middle person, the middle individual when negotiating an acquisition on both a buy side and a sell side mandate for companies, and we'll dive into the reasons later. Yep. But that's the crux of what I do.
Okay, so you help, as you said, you help companies that are looking to buy a business and who are looking to sell their business. So we'll touch on both of those aspects through the course of this chat. But should we start with the sell side so you can tell us your approach if someone is looking to sell their business?
Yeah, so number one, I always say, make sure you do your research, find out what you want. When you have an idea of an exit, do your reading, speak to your accountant, speak to a lawyer, potentially to a broker as well, and get an idea of the work that you need to do to get it into a position to sell. Now, when we first speak to a buyer and if they're ready to sell and they feel like they're ready to go to market, the first thing I like to do is get to know a bit about them, also their company. Need to find out what motivates them, what makes them tick. Is their idea of an exit pragmatic at this stage? Or if so, if it's not, what needs to happen to get them there?
So putting a process in place, get them ready.
Yeah,
to sell.
Sometimes it can be a year long, 2 year, it could be like a 5-year project depending on what they want. But the best thing to do is always give them the education and the advice to help them on their way to getting their company to a position where they want to exit within the market.
So you've gone through that process and now you're ready to sort of initially take it to the market. And I know you were talking to me earlier about the document, the teaser document that you put together, which I thought was interesting. So could you just explain a little bit about how that works and what's in that document?
Yeah, absolutely. So when you first go to market, after we've done the deep dive and got to know a bit about the company, my role in a way would be an ambassador, representative, but these things are hugely sensitive. Sure. You want to maintain a paramount level of discretion. So when we go to market, we release what's called a teaser document to potential buyers. This preserves the anonymity. So that way it safeguards, obviously, the company, and there's no backfire there potentially from going to market. Once we've spoken with credible buyers, that's a big part of what we do. We vet to make sure that there are credible buyers, is not a fishing expedition or time wasters. Once that's happened, we tie them in with a non-disclosure agreement with the buyers, and then what we aim to do is release an information memorandum.
So initially a teaser document would just be things like location, industry, staff,
ballpark figures. And then with that, we go into a bit more of the granular information with the information memorandum. So we disclose the information about the company. This gives potential buyers a really good breakdown of the state of the company. Yeah. And then hopefully from there, what we aim to do is, that's our hook, and then we've reeled them in to a meeting with our client, buyer, the seller. Yeah,
and you start looking at the negotiation process.
Correct.
That's really, really good. So let's touch on the buy side then, because you do probably split your time between the two. So give us an example of how, if someone was perhaps looking to start buying companies, and how you would work. I mean, a lot of it is similar, but if you could just explain the process from the buy side.
Yeah, I mean, no acquisition is the same, and buy sides can be a bit more dynamic. You really have to understand why a company is looking to buy. Of course, it's not like for reasons that are personal. For retirement, they are very business orientated. It could be that you're looking to break into new markets, geographical location. If you're a UK company and you want to sell a bit more into the north, or maybe London or another part of the country, you might be looking for a company that fills that criteria. You might look for to break into international markets. You might look for companies where they're currently selling to clients that you'd absolutely love to get in front of.
Dream clients.
Dream clients.
Yeah.
It also helps, depending on the size, you might be looking to consolidate parts of the market.
The supply chain you were telling
Yeah. So there are many people where they want to buy a company because sometimes organic growth can be a bit stagnant, or you can't grow the company as fast as you'd like maybe. So acquisition's a really good way to do that.
So it could be someone in your supply chain, you're spending a lot of money and you think, well, actually, you bring that in-house.
Yeah, that's a really good point,
Phil. Saving?
Yeah, I often get people that call me and they say, I want to buy a company, but where do I start? How do I know it's going to fit? And one of the key things I say to them is like, well, have a look at your costs and your overheads. See if you can bring something in-house.
Yeah.
A big part of that is then, if you are, let's say you're an engineering company and you want to bring maybe some of the steel manufacturing in-house, you can go to that provider and you think, right, if I buy them up, that's then a cost saving for my overall business, as well as potential competitors then subsidizing your overall business, and that really helps your profit margins and bottom line.
That's a really good point. Okay, so one of the things we touched on when we had a brief chat earlier, we were talking about some of the things you can do. Let's go back to when now you're selling a business.
Yes.
Some things you can perhaps do to make your business ready for sale. What sort of things can they do, or do you advise typically for businesses to do if they are looking to sell their business?
Yeah, I think the big one can be personal. Knowing that, people are very passionate about their company, and rightly so, that you've put 10, 15, 20 years into it. But I think it's always good to have a pragmatic understanding of where your company stands. Speak with your accountant, speak with, maybe corporate lawyers, speak with, maybe some brokers, and get an understanding of where your business is at. It's really important to do that, because if you've got an idea of an exit, let's say 5 million, where does your company currently stand with its financials, its assets? How long, are you ready to go to market today, or would it require a year, 2 years, maybe even 5 years?
So what about how could they make their business more attractive to a potential buyer?
Yeah, really good question, Phil. I like to think there's 5 main things that you can do. Obviously, it's very kind of broad and a bit generic, but it's a good starting position, is knowing how much recurring revenue is within the business, what percentage of your overall revenue it makes up. Having good, solid mid-tier management, that's really crucial, because in your handover period, whether you want to leave on day one or if you're expected to work it, having a good succession plan in place is paramount to that.
Yeah.
So going on to my third point is the involvement of the owner in the business. So you want to ideally move further and further away, either operationally, with the client relationship, in terms of billing, because if that business is reliant on you, acquisitions are very much about risk. So you want to make your company as risk adverse as possible. So if you are completely exempt from any aspect of your company, you can prove to a buyer that the company stands on its own 2 feet and it's ready to be bought for the new owners.
Okay, that's 3. Was 2 more you've had for us?
Two more, yeah, no, that's very good. Making sure that there's a strong billing sales operation within that, and diversification of clients. One key part of that. If your business, your biggest client is about 20%, that might, be a red flag for some buyers. If you can get it below 10, that's usually quite good. 5%, if your biggest client is 5% of your business, you're in a golden window there, because you've not got all eggs in one basket, and there's a solid diversification there. So it's very risk adverse as it were.
There's some good tips there on how to get your business ready for sale. Okay, shall we touch on the budget? Because I know a lot of people, especially those who are potentially looking to sell their business within the next few years, maybe thinking it might be time to bring that forward a little bit. So could you just give us a brief overview of your thoughts of the budget and the opportunities there are to either buy or sell.
Yeah, no, absolutely. It's something that quite current, and it is being talked about in conversations that I'm having with business owners currently.
Yeah.
The big part of it, my personal view, is it wasn't a disaster. Some people may have a different view. There have been changes to entrepreneurs relief and capital gains tax, and come April that will change noticeably. My advice to anyone thinking about potentially selling your company, you've got a really good window of opportunity to really look at the market. Come April, it wouldn't be a disaster, but you're going to lose quite a nice tax incentive to sell your company prior to the next financial year.
Yeah, and isn't there another change the following year?
Yeah, so there'll be an increase there, but what I would say to anyone thinking about it, speak to your accountant. You know, their tax knowledge is a lot better than my own.
Yeah.
But if you are seriously considering, before April is your best opportunity to do it. Afterwards, the financial incentive will be noticeably less due to change in entrepreneurs relief and capital gains tax.
Right, brilliant. Okay, we might touch on that in further detail on another episode. Okay, so that's fantastic. So should we just finish off then with perhaps some examples of some different industries? I know we talked earlier and you mentioned haulage and freight being quite common that you work in that field, and engineering. So maybe just a minute or two, just give us a bit of insight into that.
Yeah, so it's been a really interesting time at the moment throughout those three core sectors that I focus on, although we do a various amount of sectors. They're the three which have been incredibly prominent at the moment. We've been doing what's called a buy and build with some clients, where they are looking for what we call a platform asset. Now, what I mean by that is that will be the core asset, which will be their operational hub. They'll be looking for what we call bolt-on acquisitions. So they're looking at growing, and of course acquisition is a great way to do that. And part of Pinnacle and what we do is raising finance. So we're helping companies within these buy and builds. They can stretch their money a lot further, get bigger fish as it were, and bring them into their group of companies. So it's been a really exciting time, and things are ramping up, especially at the moment with the change in the budget. And come April, there's already a high degree of interest, and it's an exciting time in the M&A market.
Certainly. So just touching on haulage and freight, you were mentioning, like for instance, a haulage company might want to get into Heathrow or Felixstowe. If you could just touch on that, because I thought that was interesting. Yeah,
so really interesting point, Phil. So when a company is, like we kind of touched on earlier, maybe they're looking for what's a strategic acquisition.
Yeah.
Now, if you're a freight forwarder and maybe you're not so prevalent in the world of air freight or the UK market, you might look for somewhere in Heathrow. So it's a bit of prime real estate there, because what you can do is acquire a company there, some more boots on the ground. If you're a traditional freight forwarder, you don't necessarily have the nuts and bolts, as it were. It's asset light. With that, there are hauliers and there's other potential assets that you can bring into the fold when breaking into a market. So that's like a key example of when you look at strategic acquisition, really understanding a buyer's motivation and what they're looking for.
So if you look at to get into air freight, it might be a company that's operating out of Heathrow, and if it's
maybe ocean freight, you could look at Felixstowe, for instance. Maybe if you're looking in Rotterdam, is a great way to get into the EU market. As well, there's lots of appetite in Ireland as well. So
like engineers as a last example, I think we were talking about supply chains and engineering. You mentioned a steel fabricator.
So for instance, if you're looking at maybe cost saving, the two main points for an acquisition, you're either saving money or you're making money. So when, as we touched on before, if a buyer's looking but doesn't quite know where to start, I always say, look at your overheads and your costs. What are you spending money on? See if you can bring that in house. So if, for instance, you're an engineering firm and you want to bring the steel in house, you can look at your supplier potentially, or buy an alternative. And with that, you can have the competition, subsidise your business.
Yeah, absolutely.
Contributing to the overall
saving all that margin that they're making, selling
the
you the
margin,
steel.
and really fattening out the bottom line as well.
Let's talk about financing then, just a few different ways that you would tend to, what's the most common way of financing an acquisition, would you say?
Yeah, so there's many ways. Assets are usually a big part of that.
Yeah.
You know, I know there's like things like the Growth Guarantee Scheme, and there's various other ways that we can do where you can use asset-based leveraging.
Refinance.
You can refinance assets within it, within freight, obviously. Things like trucks and warehousing, if you own the property, is a way to do that. When it comes to acquiring, having cash buys isn't as prominent. So financing is a huge part of especially the day one payout. So if you've got a really nice, healthy balance sheet, if you're a seller, that's usually a good indication of what you're going to get day one.
Yeah.
Your profit before tax line from your P&L will probably determine the goodwill. So there's two parts of when you sell. There's the day one payment and then the earn-out period.
Yeah.
So that's a good way to understand what you could expect financially from a sale.
And we also do things like invoice finance. So
invoice financing
taking over
is
a
a big
company
one.
that's got a big debtor book.
Yeah, so construction, temporary recruitment, freight forwarding, anything where you use an invoice discounting facility can be used as part of the acquisition. So if you have a funding line and if you're only using a certain percentage, that can be used as part of your day one payment.
Yeah.
What does that mean? So instead of taking out the money and having to pay it back, the buyer will onboard the liabilities. So it's a good way to, if you've got a really healthy balance sheet, that's something I would say if you want a nice day one payout, make sure you've got a really healthy balance sheet.
Brilliant. Well, I'm going to finish on one question because I know you're very, very passionate about this,
Yes.
about what you do, and obviously people are passionate about their businesses. So just tell me, what do you love about your job and what your role and what do you love about it?
I think I love the whole experience, the whole journey. You know, when it starts from one email, just to say, look, I've got an interested buyer, I've got an interested client, or I'm selling. You know, I'm representing this company and they're selling. And then when you get to the day one completion, there's many ups and downs to it. It's a bit of a roller coaster, but just that sense of accomplishment from doing it is great. And I remember one of my first acquisitions. I remember when one of the shareholders didn't think the company was worth as much as they thought it was. So one of them got to retire early, one of them had their mortgage paid off, and the buyer had a strategic asset which was crucial for their business. And it was
just a win all round.
It was a win all round, and it is possible. So seeing everyone happy, it's from start to finish, going through the journey. It's a great experience.
I think you said, like we said before, you take years and years of blood, sweat, and tears building up a business, and you want to find someone you trust to have your best interests at heart.
Yeah.
To give you the best advice, work hard. And you do build that relationship.
Yeah,
That's what it's all about, isn't it?
When you think about a business owner, they've probably, and this is no word of a lie, they've probably spent more time in that business than they do their family, their children, their friends. You know, you want to make sure that their exit's right for them. Yeah. Ultimately, whether they're the client or your client's the buyer, you want to make sure that everyone's in a scenario where they're happy, ideally. That's
lovely. Well, thank you very much for your time
today. Having me.
Brilliant.
Much appreciated.
So if you're out there looking to buy or sell a business, Alex is a man who can go. You can have an initial conversation.
Always good to have the conversation.
Yeah.
Absolutely.
So get in touch with us. Thank you very much for joining us again. Thank you, Alex, and we'll see you on the next episode.
Thank you for watching. If you have any commercial finance requirements, please visit us at thebestgroup.co.uk. Thanks for joining us.